Hello everyone. In the last class, we come to the meaning and features of accounting. In this session, we try to analyze what is the work of accounting in our organization. That is what we call it as functions of accounting. Means how accounting works. What are the activities we consider accounting? What is the process of doing accountancy in any organization? The functions elaborate in deep about why we need to go for accounting. That's all. So first we start with functions. Means how the accounting activities will happen. The first one is identification. So identification here refers to recognizing of transactions which will impact the organizational position. So anything, for example, any n number of activities, n number of transactions that may happen. We should not focus all, but we should segregate some transactions which will impact our company's financial position. That is what we call it as identify. So what to do, how to do the transactions. So it clearly defines which transactions should be recorded, where it should be recorded, and where it should be processed. That is what we call it as identification of transactions. Then you can see second one is measurement. So unless there is no value, there is no worth for the transaction. So every transaction comes to an end with a definite value. That is what will be a measuring. So measuring in terms of money, or else measuring in terms of any other form of currency, or else measuring in terms of weightage, either number of transactions like this. So measurement here gives some value of each transaction. So every transaction without having the value, you cannot call it as a financial transaction, and it won't be counted for the organization. So the measurement is a very important function to define the position of the transaction, to define the value of the transaction. That is what we call it as measurement. That is what we call it as measurement. Then recording. So recording is a common activity. So recording is a mind process of any form of accounting. The first, it's an art of recording. So recording in what? Recording everything. Recording everything. Either might be a financial transaction, non-financial transaction, somewhere not related to the business transactions. So any entries that you record everything. That is what we call it as function of recording. So we keep monitoring of every transactions to make the activities accurate. This is what we call it as recording. Then classifying. So here classifying refers to, for example, you can just take financial transaction. Thousands of financial transactions may happen. Can we record all financial transactions in a single book? It leads to again dilemma. It leads to again confusion. It leads to probability of errors more. So that's why they need to classify all purchases one side, all sales one side, sales returns one side, purchase returns one side, expenses one group, incomes one group, assets one group, liabilities one group. Under the various subheadings will be there. So when you can, based on this group, if you classify the transactions, so it is very easy to identify. It's very easy to calculate. So it won't rush up. So on the time you can make your accurates very accurate. That is what we call it as classifying. That is what we call it as classifying. The nature of the availability of groups, they make you classify the activities. Next one, what we call it as summarizing. So summarizing means what? Summarizing means making a very, for example, you can come across summaries in English. For example, anyone sonnets you may take, the stanzas might go on 20-25 stanzas will be there. In one sonnets, or some sonnets might be on 100 to 200 lines. You can take the summary, it should be in 10 lines. So what happens? In all stanzas, they club together, they will make a simplest form of understanding what we call as summaries. So here what accounting summarizes? Here summarizes all activities. For example, 100 purchase activities happened. Can we record 100 purchase activity, 100 purchase transactions separately, and can we post 100 purchase activities separately into journal, separately into ledger? Again, we can open a separate book for each transaction. It won't happen. It won't happen. So summarizing means how many transactions might be happened purchases, no matter. To take club together and make one final value. Add all purchases for today. Finally, take 12 For that, you should pass one entry instead of passing 100 entries. So summarizing this, make the transactions the simplest form. So that makes to do account calculations will be very easy. It is what you call as summarizing. Then next you can see communication. So communication, nothing but passing of information between two persons. So accounting mainly, what is the purpose of doing accounting is to communicate the financial information to top level management. So accounting last function is after doing everything, what are the final result that will be communicated to the management to overview the financial position of the business. That is what we call as communication. That is what we call as accounting works. These are called what we call as functions of accounting. Then you can see objectives here. So objectives, I told you the meaning itself gives the 50% of the answer. That means accounting is the art of recording. Obviously, to the first point. It is what we call as systematic recording of all financial characters. Systematic recording of all financial transactions. That is what we call as first point. That is the main objective of any accounting system is to systematic record. Systematic record means you should have a process of recording. You should have a process of recording. That means we should not record blindly. We have a system. First, what we should do, for example, hope you are aware of accounting cycle. So first step, record business transactions. Second step, pass the necessary journal entries. Third step, post them into ledger. Fourth step, prepare a trial balance. Fifth step, from the trial balance, you can prepare financial statements called profit and loss account and balance. That is what you call a system or process. So in all transactions, must pass all these phases. That is what we call as systematic recording of all financial transactions. So it is a prime objective of any accounting system. First is systematic recording of transactions. Then second one is preventing and detecting of errors and frauds. Where the financial, for example, when the frauds will happen, where money is there the possibility, the probability of frauds, errors will be more. Errors may happen, it's a natural thing. It may due to overworkload or due to some carelessness, errors may happen. But frauds and all, it's intentional crimes, intentional financial crimes. So, how you overcome the financial crimes, financial frauds? Only when you have an effective systematic recording, then only you can overcome the financial frauds. Usually, all financial transactions must need a systematic recording and must need a double checking. It is what we call as you should follow accounting. So, if you follow this accounting rules and regulations very strictly, you can easily overcome the frauds and errors happening. Then ascertaining of profit and loss. Again, it is one more prime objective. That means any objective of doing accounting is to know the profit or loss of the business. That is what we call it as ascertaining of profit or loss. Why? Because when we are doing business, we should know whether we are doing right or not. We should come to know. That's why we call it as ascertaining of profit and loss. It shows the operational efficiency of the company, how it happens, what and all happen, what other things are going on. That is what we call it as ascertaining of profit or loss. Based on that, you can take your decisions, you can change your decisions, of course, everything. Then ascertaining the financial position. So, with the help of accounting, the main two statements, one is P&L account or revenue statement or income statement, what we call, and balance sheet. So, from P&L account, the name indicates profit or loss, it showcases. From the balance sheet, we come to the financial position of the business. That means what are the assets the company owes, what are the liabilities the company dues to outsiders, everything that we can clearly showcase the balance sheets. That's what we call it as balance sheet, showcase the financial position of a business. So, ascertaining a financial position. So, with the help of accounting, we can prepare P&L account and balance sheet. From that, we can extract the given information. That is what we call it as ascertaining of financial position. And the last one you can see, provides useful information to its users. So, the system of accounting main motto is to make the transparency of activities of any business. So n number of people is going to look on that. Example, company owners, management, stakeholders, shareholders, public, government. So for all these people, what is the base? The accounting information is the base. Based on that, they can judge the company, they can evaluate the company. So that's what called as provides useful information to its users. So many other people are waiting for financial information. If you go with the effective system of accounting, it leads to good, true and fair of information to the public, government and the investors. That is what we call as objectives of accounting. Thank you.